Oh, we're going live right now. Right now. Okay,
We're
that's cool.
live. We're
We're
live.
live. Okay, we get to dissect these numbers in real time, along with all of our friends.
All right, guys. So we started early today because we just got some bank numbers. And Tanner, what? Not Tanner. Tevis, what is the? This is supposed to be released. This is like a legal thing they have to do.
Yeah. So basically, SoFi. This is only SoFi's banks numbers. We had a similar moment in Q1 because the FFIEC releases the bank numbers. Some in Q1 we discovered about it because in Q4 2022 as well, it happened where it was a couple of days before the actual earnings report, and then in Q1 it also happened a couple of days before, and we actually caught it, and we knew what the deposits were before going into the Q1 earnings. And so I was looking for this report yesterday, and nothing was up. And then somebody tagged me. Shout out to Everything SoFi on Twitter because
Yeah, I'm gonna share them right now. Yeah.
earlier today. I think it just came out, dude, like a couple hours
Yeah,
ago.
guys. The reason we're going early is because we just saw that SoFi has 3.2 billion in deposits. Shout out to Everything SoFi. Thank you so much for sharing this. You definitely follow them on
Yeah.
Twitter. Versus 2.7 billion. Some analysts didn't think 2 billion was going to be reasonable, and 3.2 billion. So it's 13 point something billion. We had 10 billion last quarter, which is 3.2 billion in one quarter, which is insane growth. Absolutely insane growth. This is live, step bro. This is live.
The crazy part about this was that I was going back and forth on just Twitter messages with, I think it was Everything SoFi an hour ago. And I was saying, hey, yesterday it didn't come out. I'm not sure. Maybe it might come out this weekend. And then he found this, or she found this and posted this. So it's super fresh. It was last updated today. And I think it's after market close today as well. So this is like never before seen until now, which is really serendipitous timing that we actually get to cover it on this show live.
Yeah, I mean, it couldn't have come out at a better time in terms of us being able to cover this. This is really interesting. So 13.248 billion in total deposits. And then some other really interesting numbers are 301 million in total non-interest income. And then on top of that, you've got 431 million in net interest income. And so those are pretty big beats. Tanner, not Tanner, Tevis, did you have the comparisons?
Yeah, that's what I was going to pull up.
Pull up your tweet.
Yeah. I was going to pull up the comparisons to Q1 so we can see the actual growth rate. Tanner's not on yet, so we don't have access to the charts. But let me go to the press release for Q1.
Someone tweeted it though. Where is this?
Okay, so net interest income. Let me just share my screen a minute, okay?
Yeah, sure.
Let me do that, and then let me close that. Maybe
it's pretty insane, guys. This is if Galileo goes well, and if this even gets them. People were saying if they lose $20 million this quarter, this is okay. They lost $34 million last quarter.
Okay, so can y'all see this screen? This is the Q1 earnings report. Net interest income was at 201 million, and that was more than double from what it was in 2022. And net interest income in this report here is, I believe, 300 and something million. I'll find it right here. Hold on.
Oh, hold on. The tweet is right here. So while you're doing that, Q2 net interest income at 431 versus 2.
Jeez, man. So, okay, yeah, 431.7 compared to Q1 where it was 201. Dude, they did a double up again.
That's a 200% increase in net interest income.
Jeez, this is wild. Oh my God, this is.
And then non-interest income is at 301 million. Last quarter, it was 136.
Yeah,
so that's what that is. That's more than
a double up. That's over a double up.
Over a double. Wow,
this is insane. Wow. Okay, and keep in mind, like year over year was 33%. But I mean, we talked about it before. I know Tanner and I did, and we'll see when he hops on. But personal loans is just gigantic, man. And I think that just in this environment as well, like It's going to be like that deposit number really surprised me because I know that in the fireside chat they said, "Hey, like we're tracking for 2 billion, like that's really what we're looking for." And meanwhile, they come in at what did they come in at? 3.2 billion, something like that for deposits.
13.2. Yeah, 3.2. Yeah, they were tracking
So
for 2.7, right?
yeah, well, no,
Or did
man.
he say 2
In
billion? He
Q,
said 2
so
billion.
in Q1 they came out with 2.7, and then they
Right.
said in Q2 it's probably going to be around 2, and then they came out with like 3.2.
And do you remember him saying it's going to be 2 billion? Because I remember him saying at some conference it's 2 billion.
JP Morgan fireside chat, he was saying
Ah.
that that's like what we're looking at is 2 billion.
Tanner, I don't know if you can hear us, but I see you backstage, but it says you need to connect your mic and camera before I can add you to the stream. So you got to fix your shit.
Oh man, what a time.
3.2 billion on, and analysts expected 2, and some didn't think they would even get to 2.
Right?
Where is the money coming from, bro? Like,
Yeah, I mean, like,
it has to be coming from the big banks. It has to. Like,
well, that's what they said, right? Like, that's what they said last time when they were saying, how did you even get to 2.7, or how is this deposit growth going so fast? Because in the course of a year, they went from like 0 to 10 billion, basically, because they got their bank charter. And then like last quarter was the fourth quarter that they had a bank charter, and they went from 0 to 10 billion. And then now they're just even growing at a faster pace than that, which is ridiculous, right? Like 2.7 billion last quarter, 3.2 billion this quarter in terms of deposit growth. One of the interesting things, and we can chat about it when Tanner comes on, is the whole selling loans conversation.
Mhm.
But I think this sets us up in a spectacular place for the earnings on Monday morning, because we already know the bank numbers, we know the non-interest income, we know the net interest income, and we know the growth rates around that. Like it's not nothing. This is huge. This is pretty big. So I'm pretty excited about it.
this is like, this is a big deal. Tanner, I got you now. You just got to turn your camera on.
I don't know what's going on with my camera. As long as you guys can hear me, I'm going to try to set that up, but for some reason I can't get that started.
Okay, no worries. While you're trying to work with some shit, let me just update Steve. Steven, we got some numbers, okay?
Somebody shared the link.
Oh, you just saw? Oh, I wanted to break the news to you. So
No, I read it on Twitter. Somebody send the link. I want to see this myself.
Okay, so let me just repeat it again. Total deposits
my
at 13.
screen. I'll send you the link too.
Yeah, let me just share
Put the
this
link in
well.
the chat.
Shout out to everything SoFi. Thank you for this. Tanner, you just appeared because your mic got disconnected. That's why it's not letting me add you. So, Steven, 13.2 billion versus 10 billion. Remember, management said 2 billion in expectations. We got 3.2 billion in deposits. That's what this is saying. Net interest income at 431 million versus 201. That's more than a double. Q2 non-interest income at 301 million versus 136. Another double. So, on 3 core metrics from the banking side, it seems like we beat pretty spectacularly on all of those. And the deposits one is obviously the biggest one that I think analysts are going to care about, which is kind of crazy.
What page are these on?
This is the FFIEC report, Stephen.
Yeah, it's the link that you put in the chat.
Just Command F, schedule RI. And this thing I'm sharing on my screen is Command F this. It's on page 8.
Okay, thank you.
And that's for the net interest income. 431 million. You'll see that at the bottom.
Wow.
Yeah, line 3. You don't have to play with the zooms and everything. I got it on my screen.
Okay, perfect. Yeah. How you guys feeling in the chat? This is why are Mitt and Tevin's pretending to not be in the same room. My bricks are real, bro. His fucking bricks are. Steven, raw thoughts. 3.2 billion in deposits. If I told you that's the headline number on Monday, what do you think?
All right. Obviously, this guy always laughs.
I'm just excited, dude. I saw that you put out your article today. I'm just excited to see what you're gonna say. Like,
Link your article in the chat. Everyone needs to follow him on Seeking Alpha. It was a great article. We link it right.
It's number 2 trending. If we can get to number 1, I'll be very happy. Tennis and Tanner both put out videos and explained what they're looking for. I knew we were doing this podcast, so I wanted to put something out of what I was looking for. And I'm going to be brutally honest. I was conservative because it was going on Seeking Alpha, and I didn't want people thinking I was just blowing smoke or whatever. I so wanted to say 3 billion in deposits in that article, but I refrained to be very conservative. I'm not shocked, but look, if these numbers are real, dare I say that there's a chance they hit GAAP profitability?
I was thinking that. I was thinking.
If these numbers are real, because last quarter, let's do the math real quick. What was the net interest income last quarter?
130, no, 201.
Was
Net interest
230?
Net interest was 201, non-interest was 136. I'll put it up on screen.
Okay, so net interest was 201, and we just went from 201 to
431.
431. We lost 34 million last quarter. I mean, is this why Noto's been so fucking happy lately?
I mean, bro, he's responding to every fucking Twitter user under the sun, so it seems like he's been confident. This is not a leak of studio. So this is something that this came out last quarter. This is why, what's his name?
It comes
Chris.
out every quarter.
Yeah, this is why Hager got so excited. He thought they might be GAAP profitable as well because he saw the numbers and he thought there's a chance. He was a little off on that, but now these numbers are looking even more.
So this was
Just
updated.
getting stronger, guys.
Go ahead, Steve.
This was updated today, correct? Last
Came out
update
10
was
minutes ago, yeah.
28?
It just came out.
And that would make sense because markets are closed. They're reporting Monday morning. I mean,
Okay, how's my audio, guys?
It's shit, but it's okay. We can hear you.
Honestly, I have no clue. I did a whole stream today, and then I come on, and it's saying my camera and audio won't connect.
Did
I've
you
got
try
no idea.
restarting everything?
What?
Did you try restarting the computer?
I literally, I turned the whole computer off, turned it back on, nothing's working. So,
Okay, it's fine. It's not that bad. You're fine.
okay.
you're fine.
That being
what
said,
are your
guys,
thoughts on all these numbers?
dude, like I said, I said if they're going to, if this is going to be a really positive quarter, they're going to need a lot of SoFi Money members, a lot, and it's seemingly like that blew way past my expectations. I like $3.2 billion in new deposits is insane, insane.
Yeah, the deposits grew by 30%. That's amazing.
Like, wow.
If this is right, if these numbers are right, let's be very clear.
I think the numbers have to be. I mean,
Well,
we're,
Yeah, why would they be wrong?
yeah,
Let's just say if the numbers are right, we have no reason to believe they are not correct.
I mean, this came out as like both Tanner and I have done videos on this exact report in Q1 as well. And the numbers, like for SoFi Bank at least, were spot on.
Yeah, they're not wrong. What I did notice though is the total amount of loans held for sale went down. Which
which is what you said would happen after the lending club earnings, right?
no, that not necessarily. So
Okay.
one, I'm pretty sure every single loan is on SoFi Bank. So that means that we potentially sold a lot of loans. They could have sold 3 billion in loans here, and that's, yeah, dude. I think I mean, unless we're holding loans that are not on SoFi Bank, like just on SoFi Technologies, which is is a possibility. But we had 16.2 billion loans held for sale last quarter on the 10Q. This quarter, just on the SoFi Bank numbers, which unless they report differently somehow, is showing what, 13 point something, which means we probably grew the portfolio by 3 billion, and it's also lower by 3 billion.
So Tanner, this is what I wanted to talk to you about because immediately, you know, I thought of the conversations that we have been having all week around SoFi needing to sell loans, or when that situation might transpire that SoFi actually needs to sell loans, regardless of their desire to do so. Would the higher deposits just expedite that even more? Because I mean, they would run into what? Is it like liquidity issue or capital requirements? Like why would they?
No,
like, what is that correlation there?
higher deposits means we have more capacity, like it.
Right.
That's
So
the liquidity.
So they're unrelated points, is what you're saying. The fact that they sold loans and then they have higher deposits.
Yes. Okay. So there's a lot of there's a lot of flexibility here, right? I don't think that it's linear. I think that two things can be right at the same time. What what could happen here is that the demand for personal loans was so large that in fact they wrote a bunch of new personal loans, sold new loans, and still grew their lending capacity, which would mean that we're in a much healthier place. It could mean that guidance isn't as scary as maybe I was like Stephen put out a thing on a triple beat. I was getting worried that maybe guidance wasn't going to beat because the marketplace that Lending Club is talking about. I know a lot of people say that Lending Club isn't a great comparable to SoFi, but we have the same marketplace. We're selling to the same people. So if they're saying it's bad, it's going to be bad for SoFi as well. So one of the biggest concerns was like, okay, guidance might mean that we're kind of coming to an edge of like, okay, well, there's only so little leverage ratio that we can have. We're going to try to grow a larger book value and host more loans here, but that can only happen so fast. It literally seems like SoFi, and this is only with not knowing how the personal loan side is growing, it does seem like they're striking on all ends. It really does. They would have only sold loans if they sold them for a positive. They could have literally sold loans at a lower gain on sale margin and literally replenished it with all new levels of personal loans that are coming onto the platform. Like that's one thing across the board. The want for personal loans at this level is extremely high due to the high level of revolving credit card loans. This is nuts.
Which is interesting, right? Because doesn't that go against what Lending Club was saying in their guidance on the macro that, hey, the loan demand is going to be weak towards the end of the year?
No. Lending Club said their demand for loans is going to be really high. The demand from an institutional standpoint is really, really low. So whenever you're talking about demand for personal loans, I'm talking consumers want this. Right? Sorry?
Isn't institutions that buy the loans?
Yes, yeah, but I'm talking about who the borrowers. The borrowers have a strong demand.
No, I'm saying demand for selling loans. Demand for institutions to buy loans is going to be weak.
Correct.
But we're saying SoFi, if they don't have to, if they're not forced to sell loans right now, the fact that they did so means that they got a premium, just logically speaking, right?
Yeah, and also we could have the demand from a consumer standpoint could have been so strong that like we could have sold $1 billion and gotten $1 billion back. You know what I mean? Which just means that we got higher APRs and potentially still got 2 or 3% gain on sale margin.
Yeah, I mean, that's what it seems like to me, that they very well could have sold out of previous loans because they felt they could have made a larger spread on rolling that capital into new ones. This could be a crazy quarter.
Shout out to Josh real quick. $10 super chat. Thank you so much, Josh Noto. Top 10, not if, but when. He also sent another $20 super chat. I don't know if it's to Tanner or to Tevitz. It's on one of your channels, but he also said top 10, not if, but when. So Noto wasn't fucking around when he said that a couple of days ago. I mean, like he had to have seen the data and, you know, I mean, it makes sense in hindsight, right? You don't say a statement like that just to rile people up if you can't pull up the numbers to back it up, right?
Yeah, he's been saying that for a while, though. Like, he really believes it.
He said top 10 before?
He has said top 10, yeah. That's been his goal.
Okay.
So,
yeah, like
he's proven it.
I was just on the on my live stream earlier today, kind of complaining about SoFi's acquisition strategy.
Yeah.
Because they pay someone $75 and pay the other person $75, and then we'll pay them an additional $250 for becoming a direct deposit user. But the people that are signing up with this direct deposit strategy are obviously continuously building their deposits on this platform, and it seems to be still like accumulative, right? There's probably people that we acquired in the first like over a year and a quarter ago, whenever we first got the bank, are still adding new deposits. This is probably not 3 billion just from new users. This is like people are still pouring on new deposits. So the rate at which we're acquiring these new deposits are happening faster and faster.
It just means that the platform is very sticky, and it couldn't come at a better time, because remember this quarter was the regional banking crisis in the beginning of it.
Yeah.
So if these numbers are correct, they just shattered deposits in one of the worst banking errors since 2010 or 2011. I mean, that's a testament to how sticky the platform is. Members are voting with their dollars, and SoFi has been impervious to the environment with low deposits leaving banks.
Steve, do you think, and real quick, shout out to Nat NG for the $49.99 super chat. Thank you so much for that. It means the world. Thank you for that. That's a lot of money. So thank you for that. Do you think Wall Street is going to recognize the gravity of what you just said, which is that deposits are at this level after the Silicon Valley Bank collapse? Because the narrative on SoFi at $4 was that if Silicon Valley fails, there's no way this little neobank is going to win. Do you think Wall Street will reward that level of deposit growth? And I forget the stock price, but do you think they'll get it?
So here's the problem I have with this whole thing. Some of these places are allowed to have puts and also cover the shares. That's a conflict of interest. So I have no idea. I mean, it's hard for me to get behind when somebody downgrades a stock. I'm not just talking SoFi, I'm just talking in general, when they have a sell rating on the stock, but they also have a short position. So I don't know what it's going to take for Wall Street to wake up to this and actually accept SoFi as the way that, and I'm not saying that there's a correlation between them and Tesla, but when you think about what Musk did, and he went to war against the auto industry, underfunded from scratch, and he is winning. And you look what SoFi is doing, and they are competing and winning. Now, granted, it's on different scales, but it took a long time for Wall Street to really wake up to that. Maybe this is the quarter, maybe it isn't. But if these numbers are right, we're going to see, because the narrative is going to have to be what happens when student loans kick back in. Like, none of these numbers take into account that their largest loan segment was still firing on 50%. So what happens when all this actually happens? And if anybody listened to Powell's speech, they're going to cut at some point. Now, it may not be 2023, but they are cutting in 2024. So what happens when SoFi is growing like this in a bad environment, student loans come back, and then in 2024, the Fed starts cutting rates, and you have the mortgage market come back and SoFi ready to go with their acquisition? I mean, the stars are aligning for 2024, maybe beforehand. And like I said to you on the phone earlier, Amit, if Wall Street gets this wrong and it goes down, I'm going very heavy next week.
I know you told me you're buying a lot of shares if this thing drops.
I got the capital ready to go, and I'm waiting for them to mess this up again.
Guys, can we just look at this for a second? Because I'm just to Steve's earlier point around like profitability. Like, this is Q1. Net interest 201 million, non-interest 136. Total revenue from lending is 337 million. And then you look at this report, and that the differences add up to about 730 million. So 430 plus 300. I'm just thinking, like, if this is 730 million, we don't know what the expenses are, but a good portion of that is going to drop to the contribution profit. Like, the tech platform, like, this is negligible, 24 million contribution loss from financial services, and that's going to get better, right? This is pretty negligible, 14 million contribution profit from the tech segment.
What are we missing? Because the conclusion is we're going to be profitable, but is there something you're missing right here?
That's what I'm saying. Am I crazy?
It's not a guarantee.
Well, yeah,
no, but he's doing the numbers. That's what
we don't know the expenses. We don't know, all of the sort of financial accounting that goes in to comprise that bottom line number. But I'm just looking at saying, well, if we have okay, let's just assume for a second, rough math, that tech platform and financial services cancel each other out, like plus 15 million, minus 24 million, whatever. We're at negative 10. Doesn't matter. 200 million, like, lending is really where the main profit is coming from. If this 200 million goes to 600 million, right? Because let's assume because it's 750 that we know, assuming 150 in expenses, like, am I crazy to think that we could be profitable? Like, is that
not
a
crazy.
wild
Not
statement?
crazy.
No, because we lost 34 million last quarter. And
Right.
Noto said, think about his words. He didn't say in Q4. He said by Q4 that we would be gap profitable.
Right.
So if you bring up a quarterly chart of net income, it's gradually been getting better. In fact, I'm going to go to it right now because I don't want to say an incorrect number. So bear with me one sec. We can
I'm
probably
gonna bear with you. I'm a bull with you. Know what I'm talking about? 3.2 billion in deposits. Know what I'm talking about?
Yes, sir.
All right. So
Tanner, that was the lamest yes sir I've ever heard in my entire life. The whole chat needs to type an L right now.
all right. So
What am I supposed to? Yes, sir. What do you want me to do?
Oh God. All right. So over the last 4 quarters, we've went from negative 95.8 million to negative 74.2 million.
Can you throw it up on screen?
40 million.
You
Put
just
it on
asked him to
screen?
do a
Yeah,
very
throw it up.
thing.
Sure, hold on.
Also, shout out to Stockgoat in the chat.
Here?
Could they get a profit boost from Wyndham? Oh, yeah, that's the other thing to consider. The Wyndham is going to be reflecting in their numbers as well, right? Because that acquisition goes into the books on this quarter.
Wait. So that means we recognize the cost of Wyndham in this quarter?
Yeah.
So that
Yeah, if it was a cash deal, which it was, right? It was an all cash deal.
Yes. I think it was all cash deal, yeah.
So that could lay off gap profitability for sure, right? Because that's like 200 million that we have to
look at the September 22 versus the December 22 quarter.
Steve, you got to zoom in.
You went from 74.2 loss to 40 loss. That's 34.2 million. We lost 34.4 million last quarter. If they get another jump like that, you're right on the edge. And given the huge boost that we just saw in these numbers, it's not crazy to think that we're coming in gap profitable. And here's the thing. What's the consensus? Negative 5 cent loss for this quarter?
Analysts are expecting negative 6 cents. Whisper is at negative 4.
What if they come in with 1 cent EPS? What happens then?
Wait, what were we last quarter? Negative 14? Negative 9?
No. Last quarter we had negative 5.
Oh, so analysts were expecting no change. Okay.
Analysts are expecting negative 6, dude.
Oh, shit.
Whisper is at negative 4. If we come in at 1 cent, like this thing is gonna fly.
Yeah, and that 1 cent's not going to be financially engineered like Palantir's Q4. This is going to be real from operations, I imagine. Profitability.
And you got to think we're not going back.
And we're not going back.
Now.
Yeah.
If they hit gap profitable this quarter, and then student loans come back sometime during Q3, because we still have another 2 months of Q3. Q3 doesn't end until the end of September.
And remember, the Fed's not done. The Fed might be done raising, but the cost of capital is 5.25. Like Wall Street is not rewarding unprofitable tech companies.
And like, I just want to throw this up one last time. Like, if you just look at the rate of growth, 94 to 201 is a double up, right? 201 to 400 that they reported, another double up. 136 to 330, that's like another double up. So if you just see that rate of growth in net interest and non-interest income from Wall Street perspective that reached profitability, and they're still growing by 100% on both of those metrics, like that's the tantalizing part.
Oh man.
Yeah, I mean, it makes me think of Nubank, right? Nubank's a little bit early, but this is kind of what happened with them. As rates got high, they just went absolutely parabolic on their profitability, right? They were negative, like 20 million a couple quarters ago, and then just broke profitability at 5 million, then 50 million, then $141 million. It won't be the same numbers because obviously it's a much bigger company. And now to put into the idea of profitability into perspective, like I just want everyone to realize we have no idea what their expenses are. Looking at what their expenses were last quarter and then forwarding them now is not fair, right?
No, because as they grow, they're going to have more expenses.
And we don't know, because of the absolute jump in deposits. There could have been, like, I was expecting a much larger jump in SoFi money users. In fact, I was expecting very close to the high end in members. I won't say that because I want us all to do a new member guess here. But that amount of high customer acquisition costs, like I'm talking about for all this time, can lead to a large amount of new expenses, right? Which is still good. Even if we don't hit profitability, guys, we're 2 quarters ahead of schedule here. Like
Correct.
let SoFi grow the way they're growing. We have a terrible marketplace. The competitors are dying off, and SoFi is surviving by holding on to their own loans. And even then, they might have sold, which is
Nobody's
crazy.
expecting profitability this quarter, which is a
Yeah.
positive. I mean, people are expecting, at least me, I'll speak for myself, nobody else. I'm expecting them to say, I was expecting them to say in September, we became GAAP profitable, and we're going to show GAAP profitable Q4 and forward. Right now, only losing 34 million and seeing these jumps, even with expenses going up, there could be enough spread where they come in with a 1 cent EPS. And I don't think that's unreasonable to say if the numbers are correct.
Yeah.
I mean, look, Tanner's right. We got to see what the expenses are. As revenue goes up, cost of revenue goes up. We don't know staff.
Sales and marketing might go up.
That they've been hiring, so we'll see.
Amit, put that up on screen and read that number for me, please. Read this number right here.
Short interest is 15.52%.
That seems low.
That's been going up. It was 11, and it's been going up ever since SoFi crossed the $8 threshold. That short interest has been going up, and it's now over 15.
It's not enough for a squeeze, though, right?
That's enough. 15 is enough for a squeeze.
15 is enough for a squeeze?
I thought it was over 20% for some reason.
No, they were hovering at between 11 and 13, and it's now recently gone up as high as 15.
Yeah, I mean, look, that's something else. 15% short. If this happens and this becomes profitable, you're going to see a short squeeze. I mean, yes, SL Green was a higher short percentage. If you look at what happened with Sirius Satellite Radio, that was a higher short percentage. But this is still 15% short. That's nothing to sneeze at. That's a high.
Pouncer only has 6% short interest. That's,
Yeah, like I honestly think, and I was talking about this on the live, like there's a reason why Wall Street is shorting this company. I totally see why they're doing it. They're looking at Lending Club, a almost exact competitor whenever you look at, business style, nationally chartered bank, personal loans and deposit accounts. But what you don't get to see is the sort of, who uses what, like boots on the ground style of like, who says they bank with Lending Club? You know what I mean?
Something, Tanner, I've never even heard of Lending Club until you freaking said them to me.
What? Just today?
No, not today, but you've said them in the past. I never knew who Lending Club was. And I don't hear anybody, not a saying, look, I watch Bloomberg and CNBC all the time. I read a ridiculous amount of stuff. I never see anybody talking about Lending Club ever.
Well, so let's just talk about customer count, because that's so funny, because everyone in this chat, whenever you're following a SoFi specific chat, thinks, okay, well, who doesn't know about SoFi? Lending Club has 4.7 million users, and it goes past Steven, right? This is like, no one even knows SoFi exists yet. That's the thing. It's still such a small brand compared to the large players, right? The growth is happening so beautifully right now, and I can see why they're shorting it, because they look at Lending Club, they look at those numbers, and then they go, okay, well, SoFi is going to have to be in a similar position. They're equal competitors. But you have to give Noto and team so much execution credit right now, because they are in a bloodbath of a marketplace right now, which is what, and Chris has turned a bull since he said this, but he said, wait to give SoFi a recession, right? SoFi has been in a recession since the start. They haven't had a single quarter where they've been just or able to just grow. It's been constant problem after constant problem, and they continue to execute. Just wait until things get good. No wonder they're expecting 1 million new members in 2024, 25, whenever things supposedly will settle until we see the next, black swan event, whenever that happens. But so far, SoFi is doing what others can't, and that's why people call them the last lender standing. That's it. And
not to damper that at all. I just want to also say that just keeping the sort of euphoria of just learning about the numbers for the first time, as that starts to come down, I think that, this is definitely positive. But I want to also remind us that in Q1, we had this exact same conversation, and the bank numbers came out very well. 2.7 billion in deposits in Q1. We thought SoFi to the moon. I think Chris Hager even came on here, probably one of the most rational people, and he was saying oh, we could hit profitability. And then, the technology segment took a hit in terms of the margins. We lost current. There's other numbers that I'm saying that are not reflected in this report that could make it a mixed bag. But the caveat that I will say is we don't necessarily need to be in profitability on Monday for us to have a squeeze. We just need to be better than the consensus. And currently the consensus is completely sandbagged from an analyst perspective at -6 cents EPS. I think even the whisper is something that we can easily beat. So
Do you take that off the stream?
I just wanted people to see it. Yo,
So-
RJ in the chat, what is
on.
this net charge-off number you're saying is so important that we're not bringing up?
Before we get to that,
The net charge-off rate.
thing Tanner said. So I'm going to share my screen real quick.
Okay, and then Tanner.
I have the charge-off rates, Tanner. It's page 12.
I haven't even seen them yet, so I can if you tell me them, I can compare them versus last quarter's.
So before we go into the charge-offs, think about what Tanner just said. You have to give Noto and the management team an extreme amount of credit for execution. Well, this chart that I made completely validates that, because you think about them getting one leg and one arm tied behind their back when the moratorium started in Q1 2020. What did they do? They found a way to still grow the loan book through personal loans, and then they developed the technology and financial service platforms. And those revenue streams have been growing. You look at the yellow line for financial services, that is growing quarter over quarter. Even though tech plateaued a little bit, they're both still in their infancy, and they continued to increase lending. This is a management team that in the face of adversity executes. They don't just sit there and stress out and fold. They figure out creative ways to get around the problems. You couldn't have thrown, think about it, the largest revenue generator got capped and slashed, and they figured out a way around it within weeks. I mean, they didn't fold. This team deserves so much credit that they're not getting. And if they can do this during those times, what's going to happen during the good times? I mean, that's why I'm so bullish on them.
Agreed. Okay, so yeah, can we read the charge-off thingy?
Yeah, where is it?
Let me just share. I think it was page 12. Isn't it this line right here? The total 20 million.
Do they have it as a percentage? I don't have the form. If you could send me the link. I'm kind of working from my cell phone and this, so I can't.
The link is in our private chat on the StreamYard.
Okay.
But I thought it was this, right? Because we're on the charge-offs page.
Can you explain what exactly a charge-off means?
Not essentially loans that they're not expecting money back from. They're non-performing anymore. They're written off.
So that rate we want to have low.
Yeah,
Of course. Yeah.
isn't it just this 20 million?
It could be. Do they not show it as a percentage?
I mean, RJ, if you have the answer, because he's been saying we're not talking about this one number. So if you have it, put it in the chat. I don't know if you're trolling.
20 million doesn't sound correct. Last quarter it was.
low.
Last quarter was 71 million.
Yeah, it sounds really low.
I mean, if it's 20 million, that's going to be even better.
I'm also reading. Is this for this quarter or is this for 6?
Yeah,
Is
that's the other thing. If this is for year to date, then these numbers are completely different.
RJ, you're saying it's shown as a dollar amount. What is the dollar amount?
Yeah, I think it's 20 million.
I mean, 20 million is not bad. That's amazing. If we went from
No,
7 to 20.
that dude. That would be. That doesn't make any sense. That would put us at less than 1% default rate.
That
Last quarter is
doesn't-
2.7. That doesn't even make any sense.
Yeah.
Interest rates have gone up.
Yeah, I mean, RJ, you either put the number in the chat or I don't know what the point of bringing it up was then. But yeah. So even if that number is the same 70 million, is that, let's say it's 70 million, is that horrible? I don't think that's crazy.
No, we're
No,
expecting.
that's amazing.
Yeah,
it's
exactly.
amazing.
We're expecting it to go up because the market is just more risky.
Right.
I'm seeing people in the chat just disagreeing in terms of whether this is year to date or if this is just for the quarter.
I'm reading through it right now. I'm not seeing anything that validates it either way.
No, but if it is year to date, that 13.2 billion still means 3.2 billion in deposits.
It does. It
Right.
it means more on the net interest income side.
Yeah,
Okay, gotcha.
because you have to
It could
subtract.
mean 200 million went to 230 million. You know.
Yeah, because you have to subtract Q1.
Okay, I see what you're saying.
Which, like, honestly, would probably make more sense because, like, it's seeming like this was a like unbelievable quarter. Like, yeah, I'm not sure because I can't tell either way if it's. But yeah, still 3 billion in deposits is crazy, dude. But yeah, I wanted to go back to Tevis's point about the idea of overblowing this. I'm not overblowing it by in the idea saying that they're going to be profitable. I'm still not stating that. What I'm stating is the idea of because I'm not trying to say that they're profitable, but the fact that they could have brought on all these new members, did bring on all these deposits, all of these things, while Lending Club is having such a hard time. These are real numbers. And it is something to really sort of give credit to SoFi saying, you know what, they do keep executing over and over. It's crazy.
I'm trying to figure out if this is year to date or quarter over quarter.
So all right. The page we were looking at, the schedule RI, does not have anything on the top left underneath last updated 728. But if you scroll down a couple of pages.
Well, hold on. The quarter ended June 30th, right?
Yeah.
At the
June
top
30th.
right-hand corner, it says report date June 30th, 2023.
Yeah, but it could mean
Isn't it
January 1st to June 30th.
Yeah, it could mean that, yes.
Schedule RIE is completed each quarter on a calendar year to date basis.
Yeah, but some of these don't say that. Some of them say year to date.
So we're on page 8, right? Page 8. Schedule RI.
Page 8. Schedule RI.
Who found that they originated 243 million in mortgages? I'm getting this number somehow.
We didn't even talk about mortgages yet.
It looks to me the report was prepared 6:30 and updated today, probably minor revisions, so not year to date. Yeah, this is someone saying it's on year to date, other people saying it's not. Even if it is, I guess the deposit
sections definitely are.
Amit, dude.
What?
Stop posting our DMs, bro. Can I not tell you I'm gonna cry on my own without you posting it to the world?
Tanner, it's called fucking marketing. I think you need to learn a little bit of it before you complain about it.
Just sending a wholesome, joyous moment from friend to friend, and then the world gets to see me bawl my eyes out.
I didn't leak your dick pic.
Dude, nothing is safe. Nothing is safe with Amit.
Not around a minute. Jeez.
He knows that too. Yeah, we got to figure out this year to date, quarter over quarter thing, bro. This is
some of the things are year to date, but that's not on all the aspects of this, though.
Well, the one thing it can't change is deposits, which is important. But so I think deposits the top line number. If it's year to date on net interest income, then that's definitely going to hamper GAAP profitability.
Right. So
we need that for GAAP profitability.
Let's just do some quick math, okay? So if it's quarter over quarter, we did the math. It's like fantastic. Net interest income 200 million. And then net interest income here is
431. That would mean that
431.
it went up by 230.
230. Yeah.
That's a double. That's a double.
So it
right?
went up
No,
by
it's
Not a double. It's a
It went up by
equal.
it went up by 30 million.
yeah, it's like
Oh,
5%.
okay. Gotcha.
No, it's like less.
Yeah, it's less, like 29 million, something like that. Yeah.
Yeah,
So-
like 15%.
Yeah, 15%. And then 136, what was it? 331, right? By 136.
That would be
That's higher growth there than the first one, than net interest.
The 9 was 301 and that's 136. So call it freaking 164.
Right.
Yeah, so I mean, those numbers will affect gap profitability, but deposits will be the headline number.
Yeah, I mean, look, if this is on a yearly calendar basis, then it completely changes it, and the whisper numbers seem a lot more accurate. If these numbers are on a quarterly basis, I would think it's going to be gap profitable. So we're going to have to wait till Monday morning and see what's going on.
But
Stephen, are you joining us?
Monday, I wish I could. I can't.
You can. You can.
No. He
Yeah.
definitely can. This man has like 15,000 sick days that he hasn't taken.
Listen, you
And I
don't
said,
call
yo,
it a
Steve,
word.
call in sick, bro. It's SoFi.
No.
And he's
I
like,
can't do it.
calling sick is for pussies. I'm like,
It is. Unless I'm fucking dying, I'm not calling in sick.
he hasn't taken a sick day in 15 years. That's what he told me.
Yeah, and this is the difference between Amit being Gen Z and Steven being not Gen Z.
Bro, no, you can take one day off. Like, it's not that crazy, bro. One fucking day.
Not when you have commitments.
I mean, if you got some meetings on Monday, I get it. If it's just a boring
I
Monday,
do. It's
okay,
insurance renewal.
that's a better
season.
reason
I told
than
you that.
saying it's for pussies. That's a different reason.
That's why I asked you which day Palantir is reporting. But
Anyway,
So let me just finish that thought. If it is year to date and we actually have to subtract the Q1 numbers, and in fact, it went up by 15% quarter over quarter or 20% quarter over quarter, that still, I think, puts us in line for -3 cents EPS, which is the number that I was really looking for. Meaning that we might not be profitable, but we beat all expectations and we have a clear path to Q3 profitability. Like, we are within arm's reach, basically.
yeah, I don't think profitability is an issue for this quarter because nobody was speaking about it. That's not on anybody's radar. So as long as they come in, the number's 34.4 million. As long as they lose less than 34.4 million and show a path to gap profitability, that's all that matters.
Right.
Yeah, I don't think that the only thing that I've worried about for SoFi for this upcoming quarter would have been guidance.
I think they're going to triple B, like I said, top, bottom guidance. I don't see how they're not going to give us another guidance increase considering we have a definitive date on student loans.
Number
Yeah,
one.
this was the problem for even Q2. Like the guidance came in really, really weak. And
hold on, Tanner. One thing I'll push back on is, okay, so number one is student loans, but number two is, remember, their full year guidance was directly attributable to their macroeconomic indicators. And by and large, it's looking to be, I think even Fed members were saying that we're tracking for a soft landing, quote unquote. I hate to use that term, but my point is it's going to be better than expected or better than what the macro landscape was in Q1. So that could also be a catalyst to raise that guidance.
Look, I think Lending Club said the marketplace is going to be the same as it is today, or if not even worse for the rest of 2023, right?
Yeah,
SoFi is going to need to hold their loans. I'm not 100% sure if all of those loans that I'm looking at for held for sale are all on the bank, which is what I originally thought. I thought that they did move their entire portfolio to SoFi Bank, but still, that means that they sold a lot of loans. So we'll have to see. We'll have to see. Which could also mean that there's a lot of income there that is not on the net interest side, right? That's on you know, non-interest income, essentially.
Yeah, I mean, do we think that even with the high deposits and maybe 3% or 3 cents, is there any reason? I mean, obviously we can't predict, but is there any reason the market's just like, no, and they sell it off the way they did last quarter?
Of course there is.
Guidance.
Guidance. Why did we sell off last quarter again? Do you guys? Was it Galileo? That was the nail.
No, it was guidance.
We gave bad guidance last quarter.
No, I think technology quarter. Like we lost current. Like it was the first time we actually saw a decrease quarter over quarter in Galileo accounts.
I honestly think no one in Wall Street cares about technology platform.
I don't think the Wall Street knows what the hell the technology platform is or how big it could possibly be. They're not focused on that.
The point is, it was the first chart that you could point to in SoFi that was down and to the left, or down and to the right, and not up and to the right.
Here, let me bring up the IR really quickly, and we'll take a look.
Yeah,
I won't be able to present it on screen, unfortunately, because I'm on my phone.
So I don't know how we can really say guidance considering they increased guidance last quarter.
And just to have a recap for everybody, the guidance that they gave for the second quarter.
Tanner, I'll bring it up. I have it.
On the Q1 call, they said they're projecting 470 to 480 million for Q2, which is 32 to 35% year over year, and they're projecting 50 to 60 million in adjusted EBITDA for Q2.
Exactly. So 50 to 60 million would be a decrease from Q1.
Because Q1 was what, 70, 75?
Yeah, 70 something. It was not a strong guide at all. And so if I remember correctly, it was a little bit ago, but that's why the stock sold off, was guidance.
I mean, they increased guidance. It wasn't by much, but they keep increasing guidance. Margins came in. I mean, I don't think this is why they sold off. I just think people didn't believe the narrative around banking and thought the Fed was going to keep breaking things by continuing to increase. Everybody knew there was another increase coming, but I think everybody expected Powell to be on the war front saying, whatever it takes, it doesn't matter. We're going until it's done. And it doesn't matter if there's another 3, 4, or 5 rate hikes. And he didn't say that. He was dovish. I think the macro is much different today than it was 3 months ago. And we're going into a much different environment. It's a different setup right now. I don't think it was guidance. I think it was other things that Wall Street was looking at.
The macro was a little shit back then too.
And I don't think that we're out of the woodworks on the macro. That you're looking at all the debt for sale right now. It's not the current cohort of, like, rates were raised this week, correct? The loans that are being written don't have that. I mean, maybe today they have that, but the loans that are up for sale do not have that. There's still lower APRs or coupon rates to the buyers versus what you can get today, which means there's still going to be discounts on those loans versus what's to come. So the marketplace is still going to be weak. And at the end of the day, SoFi holds their loans for sale. Wall Street's not going to like that.
Why? Why is Wall Street not going to like that?
Well, because our essentially our entire loan portfolio is technically held for sale, and the marketplace, the buyers for loans are putting too steep of a discount on lending that no one's going to buy that. Or if they do, it's going to be at a steep discount. Lending Club came out and said that essentially regional banks, because they're struggling, are flooding the market with commercial paper. And so it's like any other supply demand issue, right? You look at real estate, there's massive amount of houses up for sale and not enough buyers, the prices come down, right? You have a massive amount of loan receivables up for sale because your banks are finding struggles right now. Okay, then it goes up for sale, and it's a buyer's market. The buyers have the advantage and get to be very choosy about what they buy.
But if SoFi doesn't have to sell the loans and they're not in a position where they don't have to sell them, then none of that matters.
Yeah, but that's not what this at least from how I'm reading this. This is
Wall
not what
Street
happened.
agrees with that or not. If SoFi can generate a larger spread by holding than selling, and if they don't need to sell to raise capital, it's a moot point. It doesn't matter.
Yeah, but so last quarter they had $16.2 billion of total loan portfolio up for sale. And now it's saying it's 13.1 or 13.2, which means we did sell 3 billion without adding any new loans. So assuming what I said, that they did what, 3.7 billion of originations, maybe it even has it on that thing for SoFi Bank. However, I didn't see it. That means that they sold a lot of loans
for this quarter.
And how what is their loans held for investment right now? It seems to be tiny, right? You're talking what, 400 million?
So that's contrary to what lending, that goes again, that's antithetical to lending clubs quarter, essentially.
What are you saying?
As in, if they sold off those loans, that's different than lending clubs issues, right?
No.
Well, we don't know that because of their originations. They may have sold off to get different loans on the books. We don't know until they give the commentary.
100%.
So it's not worth speculating on it, because even if they decreased by 3 billion but wrote another 3.7 billion, they could have done it for a very specific reason, and it's not even worth speculating about it.
I mean, I think it's worth speculating. And it's not that we sold 3 and wrote 3. I'm saying if we wrote 3, we sold 6. Like, I think it's worth thinking about.
Yeah, but I mean, look, we even in the past with regards to selling loans, or even the entire macro environment with regards to like ABS in general, we've compared them to Lending Club, and when the actual results came out, they have proven to be fairly different, not only in terms of what they're saying or what they're seeing in the market, but also what their actions are. So to that degree, I think like take it with a grain of salt whenever we throw Lending Club in the mix, because they are pretty differentiated and getting even more differentiated with each coming quarter.
I'm just saying the marketplace is the marketplace. You put something up for sale, no one cares essentially who the seller is. It's about the quality of the actual debt that you're selling, which I will give it a fair shake. SoFi has a better product than Lending Club on both high income and FICOs.
Oh, yeah.
I'm sure that their net charge-off rates are actually lower than Lending Club specifically, but still, by how much? You know what I mean? If it's a bad marketplace, it's a bad marketplace. And there's like what you guys continuously discount is the idea that we can just continuously hold more loans on our balance sheet forever and ever. It's impossible. There's regulations. There's only so much funding capacity. And so if they continuously are shelling out a ton of new personal loans, which for the longest quarters they have been, okay, they need to have a certain level of leverage ratio. I'm sure they're not going below 12% roughly. There's only so much you can add. You can't hold forever and continuously add. It doesn't work that way.
You said the problem with Lending Club was that they had too many loans on their balance sheet, correct? They were holding too many. What was the problem with Lending Club?
No, so Lending Club sells about 60 to 70% of their loans. Okay. But the marketplace is trash. There's a ton of supply and no demand, which means they had to sell at some of the lowest gain on sale margins that they've ever seen.
Right.
Okay.
Right.
If SoFi is forced to sell, we're going to find the same problems in the marketplace. We're selling to the same real estate market.
So instead of
it's not actually real estate. I want people to know that I'm not confusing real estate. I'm just using that as a like when demand is demand for selling is, or sorry, whenever there's a ton of supply and low demand, that means prices drop essentially. But yeah.
So what interest rate would they be selling at that you would say is really shitty? These loans.
Well, so what essentially what Anthony Notice said is that they'd be getting around a 4% gain on sale margin, okay, which would actually be lower than Lending Clubs. They said they would get about a 6% for holding and 4% for selling.
And so this 3 billion you're saying that you've seen we've sold off, your argument is we sold them at really bad rates, is what you're saying.
It's not really bad. If they had actually replenished their loan, like if they sold a bunch and then also rewrote new loans at higher coupon rates for themselves, then this could be amazing. We don't know, and it's all a matter of how much demand there truly is. Like,
so there's definitely demand. Rhythm Capital, which used to be New Residential Income, I believe, they purchased 1.4 billion of prime unsecured consumer loans from Goldman that were originated through the Marcus consumer finance business, and it added high-yielding prime credit consumer assets to the portfolio. It's made up of 100% fixed rate closed-end installment loans. There's a market right now. I mean, companies are buying a ton. I mean, 1.4 billion. This is a REIT.
I mean, I don't know. Like, I don't think Lending Club is lying whenever they say that the marketplace is bad.
It may be bad for them. They may have different underwriting. I haven't looked into their process, so I can't compare. It would be comparing apples to oranges. I just can't do it. But when I see Rhythm Capital buying 1.4 billion, there's definitely a market.
Maybe.
Yeah, look, we'll see. We'll see Monday morning with what they say.
Look, I think we're better served just with the limited time that we have left to run through the other business segments and provide some type of insight there rather than comparing it to other companies. Is that fair?
Yeah.
I mean, it's like, okay, guys, but I really want you to understand, it's not comparing it to other companies. I'm taking the management notes from the other companies. I'm not comparing them. Like, SoFi has shown that they brought their. Sorry.
You're using it as a point of reference.
Yes, sure.
Sure, that's what I meant. Let's talk about
but the amount of loans that SoFi has sold has gone down to near 0%. So either, a company that since the dawn of time they've been selling loans stopped for no reason, or the marketplace is bad and they had to do otherwise, which is super smart in their reasoning, but that can only go on so long.
If they lose less money, this is the last thing I'm going to say about it, then we can move on to this. If they lose less money than last quarter, and if they come out and say that they continue to generate more income for shareholders by going this route, I got no problem with it.
Yeah, and I mean, look, there could be a world where both things are true, and are there's causation between them. Like SoFi management has said in their strategy that it's going to be more profitable for us to hold these loans for longer and then sell them H1 24. And
but what does SoFi want to do? Do they want to panic investors?
Sure, but what I'm trying to say is I'm trying to reach.
Listen, if they do, I'm buying.
Me too.
I'm trying to reach a middle ground, right? SoFi management can say, hey, it's more profitable for us to hold them. And then meanwhile, Lending Club and others can flash signs that the market is weaker. Both of those could be true, and it's still within the bounds of their plan. If they can hold them for longer, we know that their plan is to hold them for longer. So, let them hold them, and they're going to be more profitable when the market turns around or when demand is back. So, I mean, you're looking at it and saying, like, is a glass half full or the glass half empty? And I'm looking at it and saying, okay, well, it's a glass, of water.
Let's do predictions.
So, yeah, that's what I'm saying. Let's just move on. I think, Tanner, you wanted to do member numbers.
I have predictions for every member and product numbers. So whatever you guys want to do.
Revenue also.
Okay.
Who's recording everything? Who's writing everything? I guess I will.
I think it's recorded.
I mean,
I meant on a spreadsheet to see where everybody's at. I'll do it. Hold on.
Steven's like, who has a piece of paper?
I was about to say who has a piece of paper. This is true. And then I realized I'm sitting in front of a freaking computer.
Shout out to about 650 people being here. We had 700 at one point. Thank you all for joining. We'll be live 7:30 in the morning on Monday.
I mean, if it's that early, I can do it.
Yeah, it is.
All right, I will do it from the car with you guys. Members. What else?
We're starting at 7:30.
Products.
Yeah, because 7 the numbers come out 7:30, and then 8 o'clock is the call. So
okay.
Wait, is that how it is? I thought numbers came out at 7 and the call was at 7:30.
No, calls at 8.
Yeah,
calls at 8.
So numbers. Okay, cool. Gives me 30 minutes of sleep.
All right, so let's go up and down the line. Members, what's everybody's guess?
I want Amit to go first.
Why? No, why do I have to go first?
Because
go
you
first.
just copied my number last time, and then everyone went, "Oh, Amit was 3,000 off."
No. I
I'll
said
go first.
482 before you said 479. So that
Because
was
I'm not.
Yeah, let's
changing
rewind
my
that one.
article. I'm coming in with 6.07 million for members.
Wait,
Total-
what?
No, how many are they going to add, Steve?
Why are you laughing? 6.07 total members.
oh because
Okay, well,
Tanner
can you do
thought
the math for us on that?
Quarter. That's what you thought.
Sure. How many members did they have?
5656.
Where'd you get the number then, if you didn't know?
Okay.
414,000.
Okay.
Okay,
That is low.
Kevin?
I'm going to go with 454.
Amit?
What did they have last quarter again? 414?
433.
Oh, 433?
Yeah, so you went lower than last quarter.
Low, yeah.
Okay, so they have 433 and Tevis, you said 454?
Mm-hmm.
And Steve, you said 414?
I said 414, yeah.
See, he just puts he's just playing Price is Right. He doesn't.
Where's
Well, no,
Riley?
I guess before you, Tanner. I rewind the tapes.
Where's Riley when you need him to go 530? And just get
The number will be 400 and
just fucking say it, Amit. It's not like you're not gonna win
61.
a prize. There you go.
461. Okay, 480. That's my number.
So Tanner just basically gets everything above like 470.
All right, products.
No, but hey, just so we're all aware, just so you guys don't think I just did Price is Right. If you guys actually checked, I did all my numbers yesterday or whatever. So I have the same number as yesterday, 480. You guys think 3 billion in new deposits is not going to come with a lot of members? 414, 3 billion in deposits, record breaking, lowest number of members.
So hold on, Steve. Walk me through the member numbers. I'll throw out a poll after this. So Steve is 414, Tevis is 454, Amit is
461.
461, and Tanner is 480.
Yes, sir.
Okay. All right.
Okay. Products? Steven?
This is one that I'd have to pull up IR real quick. I don't even know what they did last quarter.
660. I'm going to say 680 this quarter.
685.
687.
Amit, can you throw out Robert's comment real quick?
Tevis, I remember I pledged $20 to the channel. Yours or Tanner's that guesses the number of times notices loan or loans earnings called closest without going over. Wow.
Okay, we'll do that.
Like, Robert, you want me to count the amount of times he says loan or loans in the entire call? That's work, man. If Tanner and I can guess the number and then you keep us honest, who's closer, then
No, there's an easy way to do it. Just you don't have to count. Just wait for the transcript to come out. Hit Control F, type in loan, and it'll tell you.
how long?
No, that's a fun way to do it.
1 hour? Okay. All right, Tanner, you want to guess the loan?
No, I want to do products first, and then we can do that later.
Okay.
By the way, Elon just said Twitter has reached 541 million monthly active
Yeah, I
users.
saw that. Crazy.
Yeah, I saw that. That's exciting.
That's pretty amazing, bro. That's incredible. That's
Products for Tevis?
At 680 is what I said.
Okay, Amit?
687.
Okay, 675. Or sorry, 674.
I actually want it to come in lower, but
Well, I mean, like, look, in Q1 they said around 660. So I don't know how granular we're getting.
All right.
I think it's going to be
Galileo
higher with
Games.
more SoFi money users, and yeah.
Where
Honestly,
do we think-
Relay is such a crazy product that I think no one's giving enough credit to. These people really like SoFi Relay for some reason. It's probably the most cross-sold product.
So I said that Galileo is going to come in with 133 million accounts. I say they're going up this quarter.
Galileo is what? Adding how many?
No, I'm just saying the overall number is going to be 133 million. I don't know where they were at last quarter, 127 or so.
Okay. I've got a funny prediction for Galileo members. I think we'll add 0.
That's not good.
I don't think we won't bring in any. I don't think we will lose any. I think it'll be 0. And I mean, give or take 1,000 or whatever. Like give or take.
How many did we have last quarter? New members?
Or give or take 1 million.
Does anybody have investor relations open?
We lost like a couple thousand last quarter.
All right, I'm just throwing up the pool.
No, we have it's in numbers of millions, not thousands.
I'm going to it now.
But we didn't lose millions last quarter. That's what I'm saying. We lost.
We lost millions.
We lost millions last quarter?
Yeah.
Holy fuck.
Yeah,
It
'cause
went
we
from
lost the rent.
131 million to 126 million.
Oh yeah, you're right. I remember that number. 126, yeah.
How many days to learning? So Saturday, Sunday. Should I make this a 3-day poll? 2-day poll.
Han
Oh,
went.
you're stepping in for Riley, eh?
Eh?
I'm curious to see what they say.
I said you're stepping in for Riley.
Eh?
Eh?
Hello from Taiwan. Thank you to our Taiwanese brothers for being here.
You want to go to revenue?
I agree with Tanner. I think Galileo might be flat. Or
Oh, that's so funny that you.
All right, so we'll skip Galileo. Revenue, I'm saying revenue's coming in at 485.
I think revenue coming in at 487. Hello from North Korea. They let you guys have internet there? What the fuck?
SoFi's a big deal.
What do you think revenue's coming in at?
I'm going to change my number knowing that we sold a bunch of loans. I'm going to say 490.
Okay.
490, huh?
That was-
490, eh?
I will say 492 and take the top range.
There you go.
Love it. All right, adjusted EBITDA, I had them coming in at 65 million plus, so I'm going 65 million.
Adjusted EBITDA, I'm gonna go whatever corresponds to -3 cents.
I have no freaking clue.
Right?
Yeah,
I'm
me.
gonna
That was honestly my number as well.
Like
I'm
negative
gonna go.
15
I'm
million.
gonna go 71 million adjusted EBITDA.
You're going 65, Tanner?
Tevis, how many loans does Anthony Noto say? Loan or loans?
Oh shit. It has to be Anthony Noto, or can it also be Chris Lapointe? And question 1 for Robert, and then question 2 is: does loans also count for loan, or is it separate? Like he has to say
No,
loan
of course it
or
includes both. Loan or loans.
loan or loans.
Don't get
Yeah.
out of doing work. It's no fun.
Yeah, he's trying to control F it and figure it out.
I'm just figuring it out. Okay, so loan or loans, only Anthony Noto.
Okay.
24.
Oh, okay. So is it a range of who's closer? Because I was gonna say like 60.
It's up to Robert.
Okay, just to make it fair, I'll say. What'd you say? 24?
Yeah.
I'll do 50 then.
Okay.
I'll give you a nice spread.
All right, Robert, you have
I'll
the
do
number.
37. 37.
You're not in on it.
Oh,
Get out of here.
okay.
You already got like $70 to stream. We got 0.
No. YouTube takes 50% of the super chat, bro. 50%. I tested it the other day.
Oh, wait, Tanner, it's closest without going over, so I'm screwed.
Closest without going over?
Yeah. Can I change my number? Because if it's like 25, then I'm burned. It's not like whoever's closest.
Okay, go ahead and change your number.
37.
That was the.
Okay. There you go.
Was that yours?
You stole my number, you piece of shit.
You did the inception. Like that was you planted that seed.
Bro,
Okay.
by the way, have you guys seen Oppenheimer?
I'm doing tomorrow.
Okay, I didn't like
How
it.
does it end?
No, it doesn't matter. It's a historical rendition, so they drop a bomb.
I know, that was
But
a little bit of the
They
joke there.
man, it was
All right,
a
Robert,
bad.
37 and 50.
Okay. Very exciting stuff, guys. I'm so excited for Monday. If anyone cares, do people care about my predictions for all products? I did write them down.
No.
No?
But Tanner,
I know what Steven's about to say.
did you hear the rumor?
I know what he's about to say.
No, I didn't hear the rumor. What's the rumor, Stephen?
Amit, did you hear the rumor?
I did hear the rumor. I did hear.
I mean, now keep in mind that this is just a rumor. We cannot prove or disprove it. This is strictly a rumor.
Yeah.
Tevis, did you hear the rumor?
No.
It's such a horrible rumor. I heard it though.
Google's becoming a fintech company, so you can own it.
How are they becoming a fintech company?
You're going to have to wait till next quarter.
Okay. Okay.
They are going to enter the fintech space so Tanner can own it.
Well, I mean, Google Pay, they've already been in the
Tanner because Tanner doesn't like Google, so that's all.
They've already been in the fintech space with Google Pay, but
Exactly. So you should own them.
I'm okay.
You're okay.
It's okay. Tanner doesn't need.
It was a good quarter from Google. It definitely was surprising.
Was it good? It was phenomenal.
Sorry?
It was phenomenal. It wasn't good. It was phenomenal.
No, it was really, really great. Okay, it was very surprising. But
and you thought everything was going away because of ChatGPT.
My thesis doesn't change, and there's still not a chance I could own it.
No chance? None?
I mean, maybe, but I need to see how things evolve. Right now, I still think
anymore. It was a fad. No one's using that shit anymore. Like no one, bro. Like,
bro, I think that's
using it, but not to the point where it would put a dent in Google. Like no one's. It's not at that scale. It's just not that.
Honestly, it's not about chat. Like people still to this freaking day are not understanding what I'm saying. AI chat is coming. It's not about Chat GPT specifically.
Already, Google will just give AI results. That's why. That's what I don't get from you.
I'm like the Mario that like dry bone skeleton that just collapses to the floor and then has to rebuild itself every time we have this conversation. My point has been made. All right. It's not even that I'm anti like I just can't invest in it. There's not a chance that I have the belief in something that I think is going to change. I think that it's old school and it's too concentrated on one thing. We've said it so many times.
So I just want to throw out two numbers. In this quarter, they generate 18.37 billion of pure profit.
Yeah. Do you hold billions of dollars of the stock?
Hold on. I am a shareholder. I've been a long-time shareholder.
Oh, so you get 18 billion then?
I'm a long-time shareholder of Google. They finished the quarter with 118 billion in total cash and short-term investments, with another 31 billion in long-term investments.
It's my biggest gripe with Steven.
Cash on the balance sheet.
It's my biggest gripe with Steven that he talks in absolute numbers whenever holding 0.001% of the stock. You don't get any of that.
Guys, listen to me. Nobody gives a fuck about Google. We have 1 minute left. Amit, just hold on. Amit,
you swear too much.
Can you throw up that video that I sent in the private chat? And I want you to just pause it at 1 minute and 30 seconds because I had a really, really, really good laugh about it earlier today.
So let it play till 1 minute 30.
No. Start it at 1:30 or 1:28.
Wait, what is this?
I don't know.
Somebody made a video on Steven's article. Just listen to how he references us, okay? Just listen.
New article on Seeking Alpha. He is my number one SoFi guy. He does that weekly podcast with Future Investing and those two other dildos. I don't really care about those young guys. They read a lot. Steven Frio is a very intelligent, plain-spoken, reasonable investor.
And he's playing World of Warcraft the whole fucking podcast, and he's not the dildo. Like, this is hilarious.
Hey, neither am I. I'm not a dildo. I'm Future Investing.
Yeah, he remembered Tanner.
Can we confirm your name change is going to be Tanner Manson on YouTube? Can we do that right now? Can we change it?
No, Future Investing is way better.
No, it's not. It's not.
I love the name. I'm never changing it.
Okay.
So
not even something I've even pondered.
Very excited. You know what, Tanner? I may gift you a share of Google, so you have to own it.
Wow.
Okay.
If I buy you a share of Google, do you promise not to sell it?
I will hold your share of Google.
Wow, that's $130. You could
Send
get
me your
some
Venmo.
photos with those. You know what I'm saying.
All right.
I'll hold your share of Google, and then you can hold that above my head that I'm a Google shareholder.
All right. Earnings is on Monday. It's going to be on all of our channels. You literally can't miss it if you go on YouTube and you follow us. 7:30, we're going to be on live. 8 a.m. is when the call starts. We're going to be listening to the call, and I'm going to be dropping, notes. And then we're probably going to do our own sort of breakdowns after the fact. Make sure that you tune into that. Amit has to go and do Palantir Weekly. This has been the SoFi Weekly podcast. What's that?
So does Steve. Steve. I'm sending you the link right now.
So does Steve.
Congratulations to the Palantir people on your price target upgrade. That was dope.
Yeah. This has been Tanner, Steve, Dildo 1 and Dildo 2 signing off.
Bye, everybody. See you Monday.
Hey, everybody.